Nic Chahine, option expert. He joins us every Tuesday to discuss this week's option outlook. He's also a Marketfy Maven and author of Create Income with Option Spreads. Good morning, Nick. Dennis asked you how your weekend here is. I want to ask you what you think of Twitter here as it melts away here. It is trading up 20 cents in the pre-market. Is it time to get interested in Twitter yet?
It was time. I thought, I took a couple of long positions in it when it fell from grace after letting the knife settle down before I tried to catch it. I did small credit put spreads out in time and financed a debit call spread, which paid out not perfectly, but it did pay out a little. I liked it in the 30s. I've said it to you, and it ran from there. Again, the idea with Twitter is that it's too valuable of an asset. It serves a good purpose, in my opinion. So long term, somebody will figure it out, whether Twitter itself or somebody else. If the markets hold up, Twitter has decent upside potential. If I don't try to game plan it for the next 10 days or so, it's just too valuable. I mean, it's a really good platform for you, for me, for anybody to put out whatever message on whatever topic they have. And again, to monetize the advertising, I think it would have to be something like as silly as, or as simple, not as silly, as simple as if you're making money off of Twitter, Twitter should be able to monetize that. So if a professional, let's say, advertising company or news agency puts out a tweet that funnels traffic, they measure that traffic and they can charge for that traffic, just like on Google. If you pay for a placement on Google and Google in turn gives you traffic, you pay for the clicks. So it should be the same here.
Well, Nick, I agree with you here. And actually, I got down and dirty on this thing last week and added this to my investment portfolio, not my trading portfolio, but long-term investing portfolio. I couldn't resist here. I agree with you. I think long-term, they may eventually figure it out. Short-term, I don't know where it's going. But I think when I look back on this 3-4 years from now, I think the price, and I hope the price is going to be higher. So I added it to my investment portfolio there.
And yeah, long term, if I give myself time, I'm pretty sure I can make it work for me long term, as long as markets hold up without a major disaster, which we can say about every stock out there right now.
Nick, just explain. I mean, your strategies are a lot more, risk, riskless than some of the things that people like I do is buying the straight out calls. Why don't you just discuss what you do with your credit put spreads on the downside, taking in a little bit of premium? And once again, I mean, one statement that you always make, you try not to predict where a stock is going, but where it's not going. So I think you did a put spread lower, like 30, 32, something like that. You just explain that for our listeners,
Exactly. So instead of worrying about whether Twitter is going to go higher from here, I choose ranges where Twitter prices are not going or any ticker price is not going, and I try to sell risk at those levels or higher, or further away, I should say, higher or lower, depends on where you're going. So in this instance on Twitter, I went down. It was down, and it had come down really hard on the earnings, and then I gave myself another 7 or 8% buffer, so that put me at the 32 level. So instead of buying Twitter right there, I'll sell risk at 32. So I will sell a put at 32. That obliges me to own the stock at 32 if it goes through it before the expiration date. And being conservative, I don't want the open-ended risk, nor do I want to own Twitter maybe at 32, but I can limit my risk by doing the opposite, lower, and I buy a put lower at 31 or 30. And for that, I give back some of my profits, but then I limit my risk. So then when the trade is on, the risk is completely calculated ahead of time, so is the profit. So I kept my profits, I kept my risk. I know if Twitter goes to 0, I lose X. I know if it doesn't go to 32, I make Y.
How far did you go out to get some decent premium on that?
32. Oh, June.
No, June. Okay. All right, Dennis, you go.
Yeah, price line here I want to ask you about because we've had some very tight consolidation here last week in this thing. And I'm wondering if you think this is the consolidation here in PCLN to move higher, or is this a consolidation to potentially take out the 1200 and move lower? Thoughts on price line, Nick?
Price line, obviously, the first thing I say about it, it's like one of the ultimate momos as far as price movement with speed. When things are quiet, it goes quiet, but then when things are moving, whether for it or the markets, it runs faster than any stock I've seen. So be careful with it either way. The way I like to trade back, it seems to be range bound between 1100 and 1250. I mean, it sounds funny to say, whoa, that's like 150 points. Yeah, but it moves 100. It moved 100 on its earnings a couple of times recently. So it's not a lot of points in price line talk. So it has potential. It could technically break out if it takes out the recent tops that it's had, and there is a gap above it. I wouldn't fault anybody for trying to go along it. And it seems like they're making good moves. I mean, it's a well-managed company, and it brings in a lot of money. And if indeed a lot of its money comes from Europe, and Europe is recovering with the QE, and they don't look like they're slowing down over there, so it should do well there. How is it offset by a strong dollar? It's way above my pay grade and most people's pay grade, so it's a guess there. But I like the company. I like the bullish setup, and if it gets hammered, I'll go along it via credit put spreads with a lot of. I mean, the good thing about it is it's got a lot of juice in the premium, so to speak. So you can find trades via the options market everywhere. And the good thing for people that don't do spreads like I do, the VIX is pretty dang low. So they say VIX is low, you should buy premium. There's your opportunity to play it either way. And the options market is good enough to where you can play either side of the coin. So if you ask me for an opinion, I don't want to bet against Priceline. I'd rather catch it if it fell from grace. So if I were to make a bet here, it would be up rather than down, unless the market's correct.
They're putting $250 million into C-Trip here. It's been announced this morning. I think they've invested in this in the past. What do you think of C-Trip, CTRP? I'm not sure if we've ever asked you about this stock. And this stock has been on a tear. If we go back to March, stock was only $44 a share. It's now basically doubled, trading at 88 here this morning in 2 months. CTRP, do you ever trade this one?
I don't, but I do track it for a lot of my members. And on 514, I'll give you my quote on it. There was a bullish setup, some sort of an inverse head and shoulders, however you want to look at it. It was bullish.
Yeah.
I said huge positive reaction to the earnings. 80, 82 could be the target, and I'm pretty sure it's higher than that now.
Wow.
So it hit my target, and it went through it. I said I wouldn't short it, and then I said I may have missed the move. So yes, it looks great, but at some point you say, unless I was already on board a C-Trip, which I wasn't, I missed the move. So it hit my target. Do I chase it? It's almost one of those too high to chase and too hot to short. So I'll sit back and see what the market does with it and then decide. But it is, I would definitely not short it still because it's got momentum.
And it has not been the market in the last 6 months to be chasing price, because we've been in this range here really for the last 6 months, and where you've talked about this in the past. It's not like 2-3 years ago when it seems like, oh, the stock up 10 points, well, I'll be up another 10 in 3 months. It seems like there's a lot of stocks that money moves into them, it flows, and then the rotation happens, money starts flowing out of them. And if you're chasing price here, sometimes you get punished in this market. Are you saying the same thing there, Nick?
I totally agree. And there's a stalemate of sort that's going. It's like a back and forth between the bulls that want to have a mega breakout. I know we're at all-time highs in a lot of indices, but it doesn't feel like it. It feels like they're grinding and we're stalled, even though we're at all-time highs. That shouldn't feel that way. It's almost like when you say you're watching a game of sorts, everything is going one team's way, yet the game is almost tied. So it's likely that that other team is going to win the game, because if they have one thing go their way. I'm talking about the Bears. Things can go their way really fast. So here's the problem with the theory, with the macro. We have so many bubbling headlines, meaning potential headlines that could be breakouts. And all it takes is one or two of them to actually come into the ticker tape, and then suddenly the caution flags will come out. Plus the VIX is so low. If you pull up a VIX chart, every time for the last 12 months, these level are followed by big spikes in the VIX. So I'm not forecasting that. I'm just saying you should make room in your portfolio for a move like this. There's too much at stake everywhere. I mean, we got the Greece issue. They're flat out saying we're going to default, and we're not listening because it's not in the ticker tape. or we don't care. And I don't see how we don't care, because it's important for it not to default, in my opinion. No one can tell the repercussions of that. There's so much bubbling. The ISIS issue, that's it's not economic, but it's terrible, and it could be really serious really fast. So there's a lot of issues that are bubbling, and we're just ignoring a whole bunch of them. Kind of like almost playing chicken with the headline. They see the headline on the street, yet they're heading towards it full speed, buy, 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 until the headline gets here and see who ends up in the ditch. So yeah, we're kind of stalemate here, and the setup has been bullish for weeks. Every week I come into the week and the open interest tells me, hey, we've got a platform from which we can spring, and it fizzles. So this week I'm watching three things: Apple, the small caps, and I added the financials. And the financials could be a double-edged sword, because if rates are higher, then the financials run. So a run in the financials is not necessarily good news for the markets.
Nick, I just want to go general market talk here. I know you're excellent as far as, calling the turns in the market here. What a consolidation period. We've had four highs in the S&Ps between 2131 and 2134. I kind of coined the term maybe a hard top there. We've had four closes right around the 2125 area, with 2128 being the all-time high close. I mean, now the 9-day average trading range is down to 17 points here, which is very small from the S&Ps. It was up at 26, 27 just a few weeks ago here. Is it just a question of just the market just getting to be a little bit tired here?
I think I totally agree with what you said, but I think it's the conviction, the lack of conviction. They don't believe in themselves. I've said it to you before, and it sounds a little silly. It's like they don't even believe they're up here. It's like the bulls are standing around saying, "Can you believe we're up here for this long?" If you had conviction and you had a breakout, don't you think you pile into it? And we're not piling into the run-ups. Apple this week is looking pretty frisky this morning, I should say. But if I look at, I'm looking at relative strength to last week. So I'm looking at today's pre-open price action and in the ES, for example, and compare it to Friday. Yes, we've had spikes up this morning, but we look like we're chopping down. And compared to the Friday activity, it's not looking very pretty. If you look at it, we're like at the bottom end. So I'm looking at 2120 to 2122 to be a good line to look at this morning, and see how the open session is going to treat that line. Are they going to use it as a platform from which to build the price and break out of the 2130 area once and for all in the ES, or are they going to use it as resistance? So it's important to look at the indices, but it's also important to focus on a few things that are important. The Qs have a chance if Apple helps them, and it looks like it's going to help them. But there's no conviction. There's no follow-through. So they get the price action, but they don't finish it.
Nick, we got a question coming out of the chat from KDG. She's asking your thoughts on PLAB, which is Photronics. The stock's been on a little bit of a tear here since its earnings report back on March 18th. Yeah, it's kind of been taken off here, PLAB. So what are your thoughts here as we're looking at the stock at 1023 here this morning?
Wow. My thoughts are, first of all, I don't know what they do, but technically speaking, it looked like it was it had a lid somewhere around 9-ish, and then it broke out of it, and here it's off to the moon. So where it stops, you probably can answer it, but the whoever's tracking it, they can probably answer it better, but it definitely broke out. And it's one of those things, technically it hit its potential from a technical basis, but can it go higher? I don't know anything about them. So at this point, if I came into it blind, I couldn't pull the trigger on it to go long it, but it's one of those things where it could double, I guess, overnight on a headline. I'm not sure. But technically, I don't see any obvious upside.
I guess it's one of those that we've been talking about, chasing price here. And if you're looking at this thing at $9 2 weeks ago, and now you're buying it at 1023, I guess that's the definition of chasing price.
Well, let me answer the question differently. If they're asking if they have profits and should they book,
there you go.
Anytime,
there you go.
Anytime I have that question, the immediate answer, without even hearing the ticker, is like book. If you're worried,
you're a booker.
yeah, if you're worried about profits, book them and replace them with a different strategy, or replace them a week or two later. So if you miss a couple of bucks, big deal. Would you rather lose all your greens so you don't miss on a couple of bucks? A couple of bucks, I mean, more upside.
And
You know
I was just
what
going to echo that. I was going to say maybe take off half of the
Yeah.
position or something if you've been holding this since
Yeah.
850. I will tell you, KDG, looking at the double close, 1023 the close on Friday, 1024 the close on Thursday, 1020 the low on Friday. The longer, if it takes out that 1020 area, then I definitely see some potential down. If it holds that 1020 area and rallies back up, obviously the high of the move's been 1041. Dennis, I'm sorry, you were going to say one other
No, I was
thing.
just going to say exact same thing you were saying. When I'm in doubt, I'm in a position that I'm sitting on, I'm not sure what to do. I think it was something you taught me back in 1999, Jolt. I sell half. So if I've got a position there and I'm sitting up at some nice profits, but I'm like feeling a little bit like it's running too far, but I don't quite want to sell it all, it's never a bad idea to take half off the table, especially if you're up significantly there, because then you're playing with more of the house's money.
Nic
Exactly.
Chahine, options expert, Marketfy Maven. He joins the show every Tuesday to discuss this week's option outlook. Marketfy Maven, the author of Create Income with Option Spread. Nick, always a pleasure. I'll be bugging you this week as usual.
No problem. I'll be here for you guys.
Okay.
Thank you, Nick.